tryna take it down, place for you just scoring mines, best the bar.
All right, ladies and gentlemen, I got your watch list coming into January 8th, 2020, but this is breaking news right now. I was actually getting ready to shoot this video. I was writing out some of the keys here. I was going to do it a little bit earlier here because I had some other stuff I needed to get going, and then all of a sudden, the futures started dropping, and it was on the report that it was first a rumor for like 20 minutes that Iran fired missiles towards an airbase in Iraq that is housing U.S. troops. Then a video came out, which I will show you guys, of the missiles getting launched. It's kind of surreal. It's kind of crazy. And then Iran not too long ago confirmed that they have started an attack on there. So that is that Iran retaliation we've been waiting for. But now here's the important part. Right off the bat, we're dropping 1% and almost a quarter off of that news. But this move already and this reaction is already a bigger move than what we saw when we killed Soleimani. So this is what I said to be paying attention for, is how the markets react. And now this is why I want to show you the video, because you will see this was a retaliation at its finest. And it's, like I said, it's just surreal because you'll see these missiles go by. But what I'm equating that to now is we are probably going to see now a response by the U.S. This is that whole tit for tat, the whole world goes blind. This is no longer a trade war. This is not a real war just yet, but now this really does escalate stuff. And now we want to see coming into tomorrow, because again, probably by the time I finish this video, probably by the time you see this, futures will probably bounce, but it's paying attention to the percentages. If it's 2% or less, that's just about what the market was factoring in for Soleimani. If it goes above 2%, that's going to be a huge move, and that means a lot more worry and fear. So we got those UVXY plays. We did buy a few calls today, and that's also what I'm going to go over. I want to go over Tesla stock as well. So we're going to go from Iran to this, but I want to go over the plays. One, the plays we have that are going to protect us, the plays setting up for earnings, which are going to be important, and then also some individual names which still might present an opportunity, because even then, Tesla stock did good last time this happened, or a few days ago with the Soleimani news. So that's what I want to watch out. Pay attention towards where this opens, and again, nothing is going to really mean anything till we see the futures tomorrow morning, and then once it opens. So yeah, let's get into it though. But if you don't know, we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. That's the brainwash I say during the stream. But yeah, so hopefully we see you on stream. You can watch us do this live and drop your thumbs up. And then also the most important thing you need to do, post your watch list below. Let me know what you guys think. If you have any specific plays, post any of the plays you're looking at, and let's source that information and call out the plays. Especially now, this is where things are going to get interesting and volatile. Again, with earnings around the corner, I hope you guys are ready. But essentially though, this is what I wrote before this stuff happened. I just thought I'd keep it there so you guys could see, because I was still going to say still Iran concerns are in the market, and that's what the market was really taking time to move on. Before that, you saw it was having that volatility but staying up towards the top. Again, we were kind of up today, but now this brings us back down. This is what, remember when I showed you guys in that first video a few days ago, what the global tension really looks like. That's what we're starting to see play out here, so that's what's important. But the market was kind of moving on from it, and a lot of people said, oh, it's not this, and people thought the market digested it, but that's why I said we kept on our UVXY plays even then, and as you see, that thing is even up right now. That was actually the winning trade along with TLT, surprisingly, so these are going to be top ones to watch, but TLT's making a move up, but UVXY, again, this is only 1% here, but UVXY was already up from that first time, and it stayed up, so that's looking, again, you could even see the UVXY kind of do that counter reflection to the S&P, but that is going to be important, and that is important. But again, now we're going to see this Iran stuff start to really take a toll now. Depending on where we open, again, it could open with a lot of fear, and then if we have a bounce, it could just run up, and people might forget about it, but I wouldn't be surprised to see all this stuff lingering, because if it takes time, think about how much time it took for the trade war to develop. That's what this situation could boil down to. The markets aren't going to like it. They're going to bounce and wobble up at the top, as I've showed you in that one example, but the premiums are going to be all over the place. Again, some of you guys like the volatility when it comes back, but don't forget how hard it is to play during this, so keep your eye out for that. We're going to be going over some of those plays, but that's the main thing I'm watching for right here, right now. So keep your eyes out for Iran tomorrow. That's what's going to be, I think, really important, is going to have an effect on plays. But now also, actually, here, let me show you the video so you guys can see this is what it was, but all those little blue lights right here, these are missiles. So it goes on for some time. You guys could see that if you on the news sources that's came up, but this is what I'm saying. I think this situation is going to drag a long, long way. So watch out for that tomorrow. Now, as far as everything else, well, let us get into the plays. What I wanted to talk about today, and this is what I had out there, because again, I thought we were going to get another day of this kind of cuckening, either slowly melt up or wait for this development with the Iraq or with the Iran news. But instead, now we're actually getting some movements, but at the same time now, there's still specific plays moving, and even Tesla reminds me of another play. Jim Cramer talked about it today's Zoom. We'll go over that, but what I want to do is talk about now is a good time to get Tesla. Well, not really now, but pretty much how you could buy it at these all-time highs. I do want to look to play this tomorrow. I want to see, but if I am going to be buying it, I don't know about the long term. I'm not a big fan of Tesla like that, but I think at these levels to trade it, there's going to be opportunities on the upside and especially the downside, but it's going to be a matter of timing. So with that, how to go about it cheap and effectively, we want to talk about the butterfly. So again, Tesla's showing a certain type of rotation or euphoria, and that's what those plays like Crowd are doing. Some of these stocks, they're melting up. And even then, I'll even show you now, even in the midst of this, you will see, like we made a play on Shopify today, they're barely dropping, but you can see they're not, I guess they're not down as much. They were up a lot more, but other stocks like Snap, they're still kind of holding up near these highs that they did. There's other companies that have surprisingly done well. Even J&J, you see we played this today. It's just holding up regardless. So watch out for that even coming in tomorrow, but now pay attention to some of these companies. And again, I think Tesla will benefit off this, but the key to playing this is the butterflies. I wanted to do one of these today, and pretty much what the butterfly is, this is an option trading strategy. I have a few videos on this in the past and spreads, if anything. You guys could all check them out. Again, if you're ever confused on any of this stuff, ask in the chat. You know, we got some helpful people. Shout out to Cole, baby. But we also have a bunch of other videos that come on the stream. But the butterfly here, it's when you buy one contract, then you sell two of the ones below it, and then you buy another one below that. So I'm assuming these are calls. This is how it would look. You would essentially buy a 470, you'd buy one of them, then you would short two of the 475s, and then you would buy back a 480. The idea of this is that the 470 should cost more than the 475, so you're buying one of those, but then since this costs more than this, you sell two of these. So by selling two of the ones below it, you get back a credit, so that should pay for this. And then with some of that credit now, you go and you buy back the one below it, which will be even cheaper. So the whole idea is by going long on this one and short on this one, think of this as a debit spread. You're able to make money all the way till 470. But now after 475, after 475, though, you would start essentially losing, or you would cap your gains out, or essentially you would be down because, again, you only own one of these, but you're short on these. So you buy one of these to insure against the second one of here. So you're pretty much splitting up the insurance. You're going -2 here. This is the body. This is why they call it a butterfly. And then here are your two wings. You're insuring it, half of it on the upside and then half of it on the back end. So this is pretty cool. So really your max gain is going to be if the stock closes at expiration where the middle contract is. So in this case, if you did 470 calls, sold the 475, bought the 480 on Tesla right now, you would make max gain if by expiration the stock stayed at 475. Because then you would be in the money $5 here, then these would have expired, and then you would have lost on this, but the expiration, you got to collect premium here, and this would have $500 intrinsic value, so you'd win. You would lose if it pretty much goes above 475, only up until, like, I think whatever the difference is between what you're spending. So again, you're going to have $5 of intrinsic value, so this goes up like $2.50. You'll lose at like 477.50. But then anything above 480, you would lose. And then anything below 470, you would lose as well. So there's a lot of pros and cons, and this is good. The best part is it's very cheap to get into. So why I like this, we've done this on Tesla before. You could literally go get a $10, $20, or $30 play doing this because it's so cheap. And then your gains are crazy. It offers a high percentage of gain. So it's cheap to get into. It allows you to get close to the money or pretty much wherever you want on the chain, because it's not only about with the butterfly. It's not only about picking a direction. It is also about picking a specific price. So you could pretty much get anywhere on the chain. They're going to be within like 30 to 10 cents, even 5 cents, some for even 2 cents. It all depends on what you get filled at. But the key isn't to what direction as much as it is exactly where you think the stock will be at expiration. So there's that, and then you also get the huge gains. Those are the pros. The cons are it is a low probability trade. This is a 10% trade probability of profit compared to 30% as opposed to just buying a naked option. So if you just bought a normal call or a put, your odds of success on that is about 30% statistically. If you did that with a butterfly, you did this strategy, it goes down to 10%. but that's why you're able to play it cheaper. You're able to get in cheaper, and it offers way more of gain. So that's kind of the trade-off. You're going to be picking a specific price for where you want Tesla to go, but you would get a better chance of making a profitable play if you just bought a normal contract, but the normal contract's going to cost more money. So that's one of the major cons. But lastly, if it goes up or down too much, you lose. So essentially, if you're not right at your price, give or take a few bucks above or below it, like, that dollar or $2.50, depending on the distance of the strike. For the most part, with time decay and all that, you're pretty much going to lose unless by expiration you're in the money on this one and these ones are expiring worthless. So even if you're right and you think Tesla's going to shoot up and Tesla indeed shoots up and goes to 500, you would actually lose. So, or if it shoots up another $20, $30 and your extrinsic value wouldn't go up, because if it didn't get to 470, you would lose. So that is one of the cons. That's why it has such a low probability. You have to be extremely specific with this play, but it's a great way to get into plays cheap, and it allows you to get still 1,000 to 3,000% gain. So that's the beauty of it. So that's the main thing. So now why I'm bringing that up is because I have a few plays, and I made a few plays today, but one of them I want to do is I want to find a Tesla butterfly for this week. I'm either thinking getting this week or next week. The thing I don't like about them is that they are about $5 apart or $2.50 apart. I want them, but essentially right now the option prices based on where Tesla is and all this volatility, well, again, it's probably going to change based on what we see here, but it's pretty much pricing in about a $15 move. So it's pricing going into from its close, it was pricing pretty much going to like $4.85. I think anywhere around there, even on the low side, I think I might, there's either the weekly I want to play, or I'm going to look for now tomorrow something closer to between 450 or 420 on the low side. I want to see what the butterflies would be on this case. But again, let's say we wanted to do the 421, you would buy one of these, sell two of these, buy one of these, or you could widen it out. You could buy one of these, sell two of these, and then buy two of these and space them out to increase the range or the box that you need it to fall in. But that's the first one I'm going to be looking at tomorrow. I am going to keep my eye to making a Tesla play, but there's going to be a few other things, especially tomorrow. I'm really going to just be watching defense stocks too, the UVXYs, and managing the plays that we're in. But we did make a few plays today. So right off the bat too, I still like Amazon a lot. It sucks that they dropped. They hit our level. And of course, this is going to kill those plays, the ones that we made today. So I grabbed another Amazon spread. I did two of these. One of them I didn't think was going to get filled. That one, what I say, is probably the worst quality play. That one I got at Amazon January 31st, 2,300 call, and then I sold a 2,320 call. So it's a debit spread, but I only paid 25 cents. I was trying to see what I'd get filled because I wanted something here. The goal was get something with time, extrinsic value. Amazon was breaking out at those points before this news hit here. So I grabbed a 22220, 2220, and then a 2240 debit spread. I bought this one for 55 cents. So it was a little bit up. We're down on it. That one has a large spread, but you'll see the spreads are going to be very, very large, and that's what's hard. But I think this one could even save us because of the time. But I'm playing my theory against the earnings coming up and where the S&P is and kind of how tech, especially Amazon's been lagging. But those are the first two plays I made. And now these are the plays we got at the beginning of the week. If you guys remember, we have one towards next week and then the one towards this week as well. We have those UVXY. So again, we're going to lose on those. And the hope is that UVXY goes crazy enough to protect against some of those. So we're probably going to have a wash tomorrow. But tomorrow is going to be interesting one. We'll see the sell the rip event. But those were the first two plays we made. It was on Amazon. Then also today, I played a Walgreens. This one met the criteria, so I'll cover this tomorrow after it reports. But they report tomorrow morning. They're going to be interesting to watch. Again, we have the shares, but this one met the criteria. Walgreens isn't a big earnings mover, but it held up. But the option chain was pricing in a decent move. So again, the criteria, the option chain was pricing in almost a full standard deviation, about 75%. And then when you go a standard deviation and a half out the money right in the middle, you could play both sides for less than 20 or 30 bucks each, even with some time. So the weeklies were pretty cheap, but I ended up getting it next week for time. I didn't want to play both ways. I didn't even want to play it because it doesn't move that much, and I made so many different plays today, but everyone kept asking me about it. I told them, I was like, yeah, it meets the criteria. Then I ended up liking it, so I was like, all right, I'll go small with it. I did a $15 call next week, so not this week, but it covers the earnings, and it's a 65 call. So it's about 2 standard deviations or standard deviation and a half, and that cost about 15 cents. So that was the next play I made. But then another play we made today, and this one had interesting news, was Boeing. There was news that Buffett took a stake. It shot the stock up. And again, remember, the premiums were high, so I decided to take a play on it. I took the weekly, a little bit risky. I did 67 bucks. It actually went up right away, but then ended up coming down. But I got a 347.5 call, and then I sold the 352. So it was about $60 for a $500 max reward. We're still going to be holding that for this week. So we'll see, again, because they're defensive, they've had this, but if that news or rumor comes out and confirms, that's going to be crazy. And if it does get quiet, that rumor came out, even wait to see how it gets answered by Friday. So we did that, and then I grabbed 10 more shares of AbiVi. Their ex-dividends on the 14th. I still like them. I'm going to grab another 10 shares. I decided today, because I could have got another 100 shares of Snapchat, but I was like, I need to diversify the portfolio. We'll get the dividend, and AbiVi is a good growth, so I'll probably talk about this one even on the weekend. I love AbiVi, so I'm going to get some more shares of that. Then finally, J&J. This was an interesting move. It dropped and then popped today on the news that there was a study that in California that the baby powder didn't have that big of an impact. So it was good news. They skyrocketed, came back, and ended up edging up. But they're actually probably going to show some strength tomorrow, just considering their sector and how they move. But we got that play. I just did a straight up call for next week. It was 152.50. I got it for 6 cents. So I literally spent $6 on it. There was a bunch of moves on the company during when the news dropped. We were able to snake the chain and take advantage of it. That the option was glitching. We got away with a good price. I still think it's up. Or no, now it's at 5 cents on the ask. It stayed up there for a while, but that one's far at the money. That was just more playing the news, and that's why I even said during stream, I was like, that's why we played it small and only went with $6, because it was a news event. If it didn't go and confirm, it could have been big. Otherwise, it's not something you want to risk a lot of money on. But those are pretty much the plays we made today. As far as everything else, we're still in those Facebooks. I'm going to watch those tomorrow and see. It sucks. Again, we were so close on even the Amazons too, but the weeklies, that's going to kill it for us. But if you have some time, that could be a little bit better. But the Facebooks are going to be a one to watch. Tesla, and even on that note of Tesla, there is 2 other companies. Zoom is the next one, because I remember Zoom was an IPO. They got beaten down, but Jim Cramer said something positive. Remember, we were trading this up at the 90s and 100. I don't know if you guys remember that. We made some good plays on Zoom, but it started pumping up today. They had some good comments, so I'd watch that. Maybe it does have that Tesla effect where now there's some stocks that have been beaten on for so long, and if everything does start to get some of this gas, or if, again, the shitty stock rotation market comes down, people are going to rotate to those beaten down names, you might see some crazy moves out of that. And another stock like that today, we have this in the long term. It surprisingly did very well. Beyond, they had a bunch of different news. There was news about a partnership with McDonald's, and then Impossible Foods says they can't make a partnership with McDonald's, and then there was a bunch of stuff, but they liked it. It was on CNBC and a few other places. They went up a lot. I'm surprised. I would watch out for this. Again, this could be a good one with the butterflies. We've done that before, but when Beyond starts moving, it could get good, but lately, if those breaks stop, it'll get bad. But watch that. I'm going to keep my eye on that. Everything else tomorrow, there's going to be a few other names to watch. Still watching the Amazon. The UVXYs, I think those are going to be a good play. They're still holding the premium. Yeah, they've dropped, but they're kind of holding up, so we want to see kind of how those play out. But that'll probably be the play along with NOC and the defense stocks. Again, that's already gapped up 2.5%. They're making big moves, and these are offering some really, really cheap weeklies when they die down, but now they're going to get expensive again. But watch out for that. And then again, TLT, I'm surprised it's moving that much. Look for the weeklies on that. We'll keep our eye on that. Like we said, Johnson & Johnson, AbiVi, Snapchat, they're surprisingly holding up pretty good. Again, I think they're at 17. If they come back above there, that'll be good. But remember, last time they did good on that Iranian day. They dropped and then they took the rip. So Snapchat has kind of been one of those shitty stock rotations, and it hasn't been really moving on par with the market. So watch them. Watch Shopify. Oh, I forgot. We did a debit spread on Shopify too. I totally forgot. We got to play for January 24th, so it's about 2 weeks out. Bought a 490 call, sold the 500. I got it for 25 cents. Or no, 36 cents. Excuse me. It's worth 25 cents now. It went down, but I like the fact that they were up even at 420 this morning. They were still holding above that 407. They looked, again, great on the daily chart, even after this drop they do. So I like the fact that it's holding up. I think they got some stuff in them. So that's why the key on that one is going to be swing trading that one with time. Then AMD, they dropped. They had a great news today out of CES, but they sold off right off the bat. They're dropping now. If they have another bad day tomorrow, depending how they open, this might be a good time to snipe some of those contracts we sold earlier, because now those are going to pretty much start depreciating after today and this after hours. Finally, Apple. They're going to be the key, and they could affect the market a lot if Apple moves down with Boeing, but there could be even some contracts, and now both you could play it on the downside. That's one way. I'm sure the contracts are kind of expensive because they've gone up so high, but if there is a bounce, Apple might be very, very good to get some of those cheaper weeklies. And then, again, that 300 move, but it never broke above 300 strong, so we'll see. Oh, yeah, watch Microsoft as well. I forgot they're another one big Dow leader. And then Qualcomm as well, because they've been making crazy moves in the related. And then HD and McDonald's, we'll talk about those. But until they're kind of doing their own thing in a weird, they're in the weird middle ground of rotation. But That is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure we see you on the watch list tomorrow. Make sure you keep your head in the game. Don't get too much FOMO. Don't get too much YOLO. Don't get too much no. You know, just stay in the game, baby. Get that helmet on. It's all about what you think about. Perspective is very important. I need some dedication. I need some good call-outs, baby. Source that info. Be positive. Be respectful. Let's get it. It's going to be exciting. There's going to be plays. Focus on the next opportunity, not what you missed or this or that. Focus. Keep moving forward, baby. Let's go.